Welcome everybody to this week, and oh boy, what a week it has been. We are going to walk through the week that was, see what rattled the markets, what surprised us, and well, in the process, hopefully make sense of the market that we had this week. If you were hoping inflation had packed its bags and left the building, surprise! It just checked back in, ordered room service, and kind of charged it to the Bank of Canada. So September CPI rose to 2.4%. Now we're talking up from 1.9% in August. This kind of caught economists off guard, and it is making the Bank of Canada's upcoming rate decision a lot more complicated, to say the least. Energy prices and housing costs, those two were the main culprits this time around. However, the details do show they show a bit of everything. Everything got a wee bit more expensive. Even the optimism economists were selling us. Now the markets, they have been confidently betting on another rate cut next week, expecting the overnight rate to fall to 2.25%. But this inflation pop threw a wrench into the narrative for sure. Once again, guys, I keep forgetting to start off with my picture. That's fine. I can fix that on the video that we release, and edit this part out as well at the same time. All right. Anyway, think of this whole inflation thing. It's kind of like planning a backyard barbecue, and suddenly it starts snowing. Technically, you can't grill, but it is going to get, well, it's going to get awkward. So here is what it means. The Bank of Canada is still widely expected to cut that interest rate, but instead of a victory lap, it's going to look a lot more like a cautious shuffle. I use the word hawkish. Yeah, we're going to see some hawkish speech coming out of TIFF for sure. Now the loonie, on the bright side, the loonie seems to be unfazed, as it actually perked up slightly after the inflation data dropped. Proof that perhaps even currencies like a little bit of drama in the economy. And finally, economists now think we might only get one more rate cut this year. Particularly, they're actually thinking this month, but after that, the Bank of Canada could very well slam on the brakes faster than a Canadian eyeing a good yard sale. Oh boy, that's a good one to start off with. We got more. In our next story, tariffs are once again taking center stage. Prime Minister Mark Carney, he wrapped up a week of trade talks with a bold warning. If the U.S. refuses fair access to Canadian markets, well, Canada will return that favor. So yeah, after years of playing polite neighbor to the north, Ottawa's done pretending this is all just a friendly snowball fight. If Washington wants tariffs, Carney said in not so many words, but basically, we got mittens and we're not afraid to use them. I do like a good pair of mittens, that's for sure. Meanwhile, in a twist worthy of a political soap opera, well, Donald Trump announced that the U.S. would stop all trade negotiations with Canada, effectively leaving our biggest trading partner relationship hanging by a little bit of a thread, and it's a frayed thread for sure. So while Carney was talking tough abroad, Trump, well, he was talking a lot tougher at home for sure. In fact, in late breaking news, our orange friend to the south threw a wee bit of a Trumper tantrum and threatened an additional 10% tariff right across the board in response to an anti-tariff commercial he didn't like. Oh boy, I feel bad for Doug Ford. Doug Ford is responsible for this anti-tariff commercial. A few key points that we can take away from this. Canada's export-heavy economy, it does depend on stable U.S. access. Uncertainty here ripples across manufacturing, agriculture, and of course, energy. You guys are getting to me. Carney's message wasn't just bluster, it's leverage. So Canada's already courting new partnerships in Asia. So we've been talking to Singapore, Malaysia, South Korea, and it's all, of course, all in a big effort to diversify trade. Now, Trump's newest threats could certainly, well, they could certainly trigger some market jitters in sectors that are exposed to cross-border supply chains. Okay. In pension news, Ottawa had some strong words for Canada's biggest pension funds this week. Essentially, stop sending all your money abroad and start showing your home turf a little bit of love. So with more than $3 trillion under management, these funds are power players when it comes to the global market. But only a sliver of that money currently stays in Canada, with most of it parked in the US, Europe, and also emerging markets as well. The federal government now wants to, well, they want to change that. They want to encourage them to put more cash into Canadian infrastructure, clean energy, housing, and homegrown companies. So Finance Minister François-Philippe Champagne and Prime Minister Carney have both signaled that a new framework is coming to align pension fund incentives with national growth priorities. That could mean tax perks for domestic investments, streamlined regulatory approvals, or public-private partnership programs designed to make investing at home a wee bit more attractive than chasing some of those returns from abroad. The official line is that this is about economic resilience, keeping jobs, innovation, and capital cycling within Canada's borders. The unofficial translation, if you love Canada, put your money where your maple syrup is. And oh boy, I am really behind on these. I gotta be let's here we go. I gotta put these things up. Now I got a whole bunch of editing when I turn this into a video. I love to create work for myself, but that's fine. All right, this time I will get the picture up. I will get it up for sure. I think I will. Oh, that's the pension one. All right. This is the new one. Oh boy. If you want to see the pictures in the right order, guys, you're going to have to watch the video now. Oh boy. All right. This week, Canada officially reduced the tariff-free trade. Let's start that over again. I'm having a day. I was off to a great start. Now I'm having a day. But all right, guys. This week, Canada officially reduced the tariff-free import quotas for General Motors and Stellantis, arguing that both automakers have fallen short on their commitments to build and source more vehicles in Canada. GM's quota dropped roughly 24%, while Stellantis, oh boy, they took the bigger hit, nearly 50%. That's not just a trim. That's kind of like a haircut you'll regret as soon as you see a mirror. The move is part of Canada's push to reinforce its manufacturing base, but it's happening just as trade tensions with the U.S. are bubbling up again. Ottawa's message is pretty darn blunt. If you want tariff-free access to Canada's car market, you need to be creating Canadian jobs, not just slapping a maple leaf sticker on a Michigan-built pickup. The policy shift stems from the Canada-U.S. Mexico agreement, so CUSMA, and those rules, they tie tariff-free access to regional content requirements. Canada's review found that automakers weren't quite hitting their promises for domestic production and supply chain investment. So Ottawa they've reached for the lever. It does, the lever that does control those import caps. The decision dovetails with Prime Minister Carney's tougher tone on trade. It's a signal that Canada is serious about industrial policy and that the days of letting foreign manufacturers use the country as a showroom instead of a factory floor are, they're absolutely numbered. It also plays to Canada's long-term EV strategy. The government has poured billions, we're talking billions with a big B, into basically battery plant subsidies and mineral supply development. So when Stellantis and GM underdeliver, Ottawa sees it as a credibility issue. We gave you the golden ticket, now start making chocolate. Oh boy. All right. And our final story, and those of you who were here at the celebration video yesterday, you made some comments on the scary beaver, but Halloween's coming up, so what can I say? So Canada's infrastructure strategy is moving from slow build to full power mode. So this week, the Canadian Growth Fund And the Building Ontario Fund announced a joint equity investment in Ontario Power Generation's small modular reactor project, so SMRs. This is a world's first multi-unit commercial nuclear build expected to power 1.2 million homes once it's complete. The project at Darlington, Ontario will serve as the template for similar SMRs across Canada and potentially for export abroad instead of the massive decades-long mega projects that, I'm going to say that over again, instead of the massive decades-long mega projects that gave nuclear energy a reputation for endless delays and ballooning costs. SMRs are smaller, modular, and they're much faster to build, like really, really fast. They kind of remind me of IKEA. So you could think of them as the IKEA furniture of nuclear power. Cheaper, quicker, and only slightly terrifying if you lose the manual. By stepping in as minority equity partners, the Canadian Growth Fund and the Building Ontario Fund, they're doing more than just writing checks. They're de-risking the project so that pension funds and private investors can follow. It's basically a page right out of Ottawa's new playbook. Use public funds to attract private ones and make clean infrastructure investable at scale. This will turn into a huge vote of confidence in nuclear energy's comeback as a cornerstone of Canada's net zero strategy. It creates a model for financing other complex projects like carbon capture, hydrogen, and green steel, where government backing unlocks, of course, that private investment. And this does fit, well, it firmly fits squarely with Canada's new economic theme, resilience through self-reliance. And quite honestly, the timing couldn't be better. With global energy prices still volatile and geopolitical tensions flaring, having a domestic source of clean baseload power, it's looking less like a nice to have and more like a national insurance policy. You do know that Canada's serious about energy when we start investing in reactors smaller than Costco. Though, let's be honest, the snacks are still better at Costco, for sure. So to recap this week, we had an inflation heating up in the Bank of Canada, sweating through a few of those policy papers. Carney trades punches with Trump over, of course, tariffs. Pension funds get told to invest where they live. Automakers learn that made in Canada actually means something again. And nuclear power is officially cool, or, well, at least controlled. Canada's economy. No, Canada's economy. Right now, it does feel like a snow globe someone just shook. Everything's in motion, but once it settles, we might actually like the new landscape. At least that's what I'm hoping. In short, plenty to keep investors on their toes. All right, guys, that's the news. That's the news this week. Let's just restart the whole stream. It was fun. It was fun. Anyway, oh boy. This is now the part where I find how far behind I am in the comments, and we try to get ourselves all caught up. All right. Kicking off the top, we got Jonathan coming in here saying, "Am I late for a tasty Trump tariff tantrum taco?" No, unfortunately not. I have a feeling there'll be more of those to come. It doesn't take much to get on Donald Trump's bad side, that's for sure. And Claude said, "Hello, I read fast and saw a trumpet tantrum." Oh boy. Those ones tend to be a little bit louder, I think. Scratch is in the house with a hello, everyone. We got Bismarcky with a happy Sunday all. King of Days in, hello all. Scratch says, "Braces yourself for the second round of inflation." All right. Oh boy, you're bringing up ASST again, World Free Speech. We did look at that yesterday. Maybe we'll bring it up a little later. We'll look at it a little later. I want to get through these hellos first before we jump too far in. We got Mary in the house with a hello all. Guys, that means hit the like button. If you haven't yet, Mary will be watching. You don't want her scowling. You don't want her scowling for sure. Keep your eyes on for a dip. Oh boy. And I think that's in reference to ASST. Politicians says, "Government clown show." Welcome to politics. November 4th, worst budget ever drops. We'll see. Yeah, I mean, it's going to probably be the most expensive budget. Politician ever lie? Are you a spy boat? What's a spy boat? I don't even know what a spy boat is. Um, all right, let's see. Larry is in the house. Hello, Larry. Good to see you. The federal government wants them to ignore their fiduciary responsibility. Uh-oh. All right, I'm gonna jump over here. And remember, guys, I'm gonna try to jump over the really political stuff. Because we're not here for the politics, unless it ties directly into into finance. We're gonna kind of try to avoid, especially whether you're right or left, if it's kind of name calling. Those are the ones we're gonna avoid. Because I don't want to create a little bit of a war between one side or the other. Let's see here. So Larry says, we're putting 300K into Turkey tomorrow. I have zero loyalty to where I live. To Turkey, like the country Turkey. When I first saw it, I was like thinking, boy, you're going to have a very expensive Thanksgiving. But yeah, okay. Interesting. Very interesting. Let's see. Can you hook me up? I need a job. Lily is in the house with a happy Sunday. We got Cowboy. Greetings all. Let's see here. I'm trying to world free. Seriously. When I said a little while, when I said give me a chance to get down a little bit, I didn't mean that fast. We will talk about ASST before we're done. JJ says howdy. How are you, JJ? Hopefully you're having a great weekend. All right. We get a good afternoon from Rory. Boy. ASST. Oh boy. Funny how car jobs are important and oil, gas jobs don't matter. Yeah. Let's see here. Nuclear power. Hire nothing but Homer Simpson to monitor the power plants. Oh, yeah. Quite honestly, I think now with probably the new ones, I'd be surprised that AI does most of the heavy lifting when it comes to monitoring. Let's see. And Mary is saying 14 likes, 50 watching. There's actually 57 people here. And I hope there's more than 14 likes. You know what? Look, Mary's right. We can do better. I'm going to have some coffee, guys. I'm going to wait. I'm waiting for the likes to go up. Okay, they probably went up. I don't know. I can't see them. Mary will let me know, though. Assisi says, once BTC USD cracks the 115 resistance, we'll clearly be bullish again. I would like to see that, absolutely. I do think that this will be a better week ahead of us for crypto, unless we get some crazy stuff happen. But I think there's a chance we could even break that 115 resistance this week. But we'll see. Skins is in the house. Despite the stuttering, a lot of good messaging in that intro. Yeah, you gotta love it. Jersky, hello, happy rainy Sunday. And silver gonna fall this week. Well, we did have a pretty rough week for gold and silver, and we kind of knew it was coming. They've been on a long run. They were over, gold, silver, both overdue for a correction. We got a correction, but is the correction over? That's the question. If it's not, you could be right, and we could see silver continue to fall for another week, both silver and gold. But we'll see. I have a feeling that I don't think we're going to see it. I think gold may recover this week. Rory says, Larry's hungry for turkey. Oh, there we go. Oh, and let's see. Politicians wants to know, what's the attraction with Turkey? I don't know what the tax situation is in Turkey, but it's probably better than the United States. Maybe. It's hard to say. It's absolutely better than Canada. Vic says happy 4 years. Yeah, so we had a bonus. We had a bonus live stream yesterday. The channel we've been running now for 4 years. So that's pretty cool. And it's funny. It doesn't seem like 4 years, but I've been doing this for 4 years. King a Day says, joining the gold train, bought $25 Wealthsimple's physically backed gold to start. I will be adding to it gradually. Yes. So yes, I mean, now Wealthsimple, I mean, this is great that you can buy you can buy commodities on Wealthsimple. I like this new addition. And speaking of new things this week, guys, have you guys noticed some of our favorite covered calls got a little bit of a promotion, a raise. So HYLD, we've been talking about it. It's now up to 15.3. And I know last week you guys were predicting, and I think it was Rory. I think Rory predicted 15.2, but 15.3, even 1 cent better. Not too bad, not too bad. Vic says, we are in a codependent relationship with the USA. Yeah, I hear you. I hear you. Jay, I had to literally good out the meaning of a proxy war meant, and we are already deep into it. Companies know something that we don't. Mark Zuckerberg have a bunker ready. Well, I hope not. I mean, I would really love to see some sanity come back to the world. That's for sure. But what can I say? Let's see. Google. Skiz says, in my humble opinion, zero allegiance to where you live is part of the problem. Rory says, I still invest in Canada, but honestly moving new capital to the USA. Skiz, happy 4th year, Mountain Finance. Awesome, thank you. All right, Claude. Oh, the QQQs. I like this. And I am behind. I don't know how far. Actually, let's see. This is 4:20. I'm only 1 minute behind. I'm doing good. today. Let's see. Would you always keep gold and Bitcoin in your portfolio regardless of cycles, or would you sell them all from time to time when you feel the cycle has ended and buy again some years later? It's a fantastic question. It is a fantastic question. So when it comes to Bitcoin, most of my exposure, of course, comes through ETFs because I don't want the hassle of dealing with keys and hardware wallets. I've got a hardware wallet, but I don't have any Bitcoin on it at the moment. So I tend to be this way. If I feel like a huge, massive drop is imminent, I might sell. Okay? And why would I sell? Well, because I'm going to buy back towards the bottom of that cycle, because that's what the whales do. But I have to, I'm very careful about it. And I'm also that type that if I do, so let's say I sell and I think it's imminent, but it doesn't happen and it continues to go up, then I'm probably going to sort of sit at that point and I might stay out of it until it does fall. I might. It really depends on what's going on. But if I felt it was imminent, and that to me, it's a risky move. That's my trader side. That is my trader side. Now, one of the things I will do as well is if I was holding, now right now I'm holding HBTE. So that's where I've got most of my stuff. Other than I have the Solana ETF as well. Because I've got most of my Bitcoin exposure through HBTE, I'm getting some nice dividends, all of that fun stuff. But normally, back in the old day, I used to switch between just a straight up spot Bitcoin ETF, and then when the market got bad, or it was just not bad, but when we got into a funk in the market, I would often switch over to BTCY so that there I could pick up some dividends. Like, for example, when the market went down, the last crypto winter, 2001, the market got down. We were down around 20,000 for a long time. That was a perfect time for me to be using BTCY. I would be picking up some dividends. And then once it looked like Bitcoin was finally getting ready to start moving back up, I sold out of that, moved it into I think it was BTCC at the time, and rode that up. So that's kind of the way that I would do it. When it comes to physical gold, if I had physical gold, no, I would not sell it. That would be a pain in the butt because, physical gold. Now, if you're holding gold like on Wealthsimple or something, you could do it if you wanted to. But the reality is, it's going to continue to go up. You don't have to do it. It's not a big, I don't think it's a priority. I don't think it's a priority. You're fine if you don't do it. All right, let's see. Rory says, I'm just that good. Hamilton's press release came out shortly after Friday's show. Nice. Let's see. HHIS up 1 cent and HBTE, I know, HBTE up 10 cents. I love it. I love it. That one there already gives me crazy amount of dividends, so I'm pretty happy with that. All right, let's see here. At Vic agreed. 50% withholding tax now on U.S. dividends for Canadians. I have not heard that. I don't know where you heard that from, but then again, who knows? Donald Trump is kind of upset. Like, I know last night he threatened an additional 10% tariff on everything right across the board. Now, obviously, once he has time to think about it, I don't think that's going to happen. I think that was kind of more of a knee-jerk reaction. Farmers in the U.S. would get really upset, for example, if all of a sudden they were paying an extra 10% on potash. Energy is not going to like it if they're paying an extra 10%. So I don't think that's going to hold. I think that was more or less his gut reaction to, well, a commercial. Doug Ford's Conservatives created a commercial with some stuff from with Ronald Reagan talking in it about how he doesn't like tariffs and how tariffs is, is a bad thing for the country. Now, Donald Trump says it's all lies. Well, I've heard some of these speeches from Reagan, and he was not a fan. Despite Donald Trump saying he was a fan of tariffs, he was not a fan of tariffs. So, Donald Trump got a little upset over all of it. We'll have to sort of see how that all turns out. Larry says over 60% of the portfolio is in Asia and Middle East. With the population drop in the West and advancement from third world to second world, they are the future. Okay, fair enough. Skiz says both gold and Bitcoin should be self-custody. And you know what? And I'm okay with that. I don't do it myself. But there's a lot of people who swear by it. With Bitcoin, there's that phrase, not your keys, not your Bitcoin. Fair enough. When I realize when I'm investing in Bitcoin ETFs, I don't own any of that Bitcoin. Obviously, that's all owned by the management company, and then they're selling me basically an ETF that guarantees me whatever basically the profit or the growth of said asset that that they hold in that basket, and I'm okay with that. But no, I understand. Like there's people who are who very much like I have to have that gold, I have to have the silver, and that's fine. There's also the middle ground. There are people who will buy gold, but they won't custody it themselves. They might, for example, they might custody it through something like the Canadian Royal Mint, because they'll hold your gold for you. There's all kinds of different options, definitely. Cowboy, our government invests more in other countries than in Canada. In my humble opinion, that's a big problem. Yeah, well, I mean, we have to start pouring some money into Canada. What I'm just trying to sort of think here. When it comes to all of the infrastructure, this whole One Canada thing, that money needs to flow. And this is even this thing. Like, there's a lot of people on every side of the political spectrum arguing about this November 4th budget. It's going to be big. And here's the thing. I'm going to give you my perspective. I don't mind it being big but there's a big if. I need to clearly see that money is going into building a lot of infrastructure. If it's being wasted, then I'm 100% not okay with it. But if it's going into that infrastructure, if it's going to really give us a boost to get us on that road, then fine. Short-term pain for some long-term gain. I'm okay with that. But, I have a feel, and this is the thing, I do worry that we're not going to see that clearly in this budget. And that does concern me for sure. All right. Silver Bear, 50% withholding tax. I pay 15%. Where did you hear this? Let's see. On YouTube that it was changing for 2026 from 15 to 50. I've never heard this. I've never heard this. I'm very skeptical, politicians. I'm very skeptical on this. I would need to see something to show. And honestly, if that were the case, if you guys remember when Donald Trump was threatening it over the one big beautiful bill, he had that one little part in it to slowly start increasing the withholding tax in Canada, how much we would have to pay the IRS. He had that thing in there at that point. But that got struck out of that bill. And if there was already plans to increase it from 15 to 50 in 2026, that would have been front and center already in all of the reporting on that bill, and it wasn't. It wasn't. So I am very dubious on that one. I'm very dubious. Let's see. Jay says, in my opinion, crypto is too volatile for my liking. I used to hold ETH, all right, and in the end, I'm just happy with HHIS, which has some Coinbase and Misty. Yeah, I mean, yeah, you can get some very indirect crypto exposure. It's still crypto exposure, but, you know, and that's the thing. I know that some people will look at crypto and be like, it's a scam, but, you know, I'm okay with that. I'm okay with people. If you really don't, you know, if you really don't feel comfortable with crypto, then you probably shouldn't be investing in it. You know, if you look at, well, look at Warren Buffett. Warren Buffett has always sort of advocated that you invest in the things you know. You know, you don't go and you invest in some company and you know nothing about the company. Then how are you going to know whether or not your money is being, is safe? If it's a company that you completely don't understand. So yeah, if you don't like crypto, you don't have to invest in it. There's plenty of other things you can invest in to make some money. You can make money without touching crypto, but if you do like the crypto, crypto can make a lot of money. That's without a doubt, without a doubt. Cowboy, we need to develop actual infrastructure, not talk about it or study it more. Get the feds out of the way and let it be built. I agree. Absolutely. Absolutely. Let's see. You're right. Looks like 50% dividends is not confirmed. My mistake, trusting YouTube. Oh, no worries. It's a lot of times, and you got to be careful, guys. This is what I always say. When it comes to YouTube, you know, whoever it is on YouTube who's telling you some stuff, sure, maybe they're right, but maybe they're wrong. You got to take it with a grain of salt. I always say, do your own due diligence, not just with stocks, but with news. I mean, if I came on here one day and I gave a crazy news story, you know, if you're like, what? That can't be right. Well, go look it up. Go look it up. Make sure. You know, make sure I didn't, I didn't fall and hit my head before the broadcast and, and started just making stuff up off the top of my head. I'm not going to do that, but you never know. And sometimes there are some YouTubers. I don't see it happen a lot in Canada, but I see it more in the US where they will sensationalize things to the point that it really starts bending the truth quite a bit. So you want to be a little bit careful. I always say take things with a grain of salt. You know, if somebody says something on YouTube that sounds interesting, go dig into it a little bit. Dig into it a little bit. Just, you know, that way there. You don't. The worst thing you want to do is hear something from a YouTuber and go off and start telling your friends, oh, as though it's for real, and say, oh yeah, this and this and this. You know, if it's not from a source that you trust, then yeah. You know, you could end up looking a fool. You could end up looking a fool for sure. Let's see here. Cowboy, Doug Ford, another Homer Simpson. But you know, Doug Ford's smarter than Homer Simpson, though. You got to give him some credit. Come on. Cece, it's hard for me to not have a Robin Hood feeling about Wealthsimple. How too suspicious am I? I can understand that. Other than I found like Robinhood initially, when Robinhood first came out, they used to almost gamify investing. So like, you make your first investment and you have little animations and stuff and things to sort of create a good feeling in you. And they got in a lot of trouble for that too. And they had to remove some of the animations that they were doing. Wealthsimple has never got quite that way. I mean, I like Wealthsimple. They have very much been, I find that they've been very upfront, very like there's no surprises with Wealthsimple, none that I've had. And I like the fact that they're not just making changes for the sake of making changes. A lot of the changes that they have brought in have been the stuff that we've all wanted. So far, Wealthsimple, if we put this in a baseball analogy, they don't have any strikes with me yet. Not yet. Is there things I don't like? The stock lending, I think that's stupid and irrelevant, but that's just me. It doesn't hurt anything. I just don't like it. All right. Silver says, I don't use YouTube as an income source, only routers and Bloomberg. Well, there we go. There we go. Yeah. I mean, that's the thing. So, I mean, even my channel, I mean, if I bring up some stock that is fantastic and I love it, that's me. I love that stock. You still want to dig into your own data. You still want to actually look at look at the fundamentals. Make sure that you agree. I mean, maybe my risk tolerances are different than yours, and maybe my fantastic is mediocre at best in your, in your vocabulary. So always, 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 always dig deeper, guys. Always dig deeper. Silver says InfoSource. Roku is in the house. Hello, all. Enjoying some Giant Tiger branded chips till my divvies come in. It sounds like your dividends are your lunch money, but yeah, absolutely. Money going into into dream green projects. Well, it depends on what you consider dream green, right? The money going into nuclear, I think that's well spent. I'm a huge proponent of nuclear power. And I also love oil. I mean, I still love oil. I mean, I'm still very bullish on oil, but when it comes to out of all of the green technologies out there, nuclear is my favorite of them. I think cost effective, just nuclear is just really, really good, especially now. They've really modified it quite a bit. But anyway, Cowboy buying HBTE on Monday. Nice. Skiz, yeah, making those pension funds like OMERS, those should be 51% Canadian. I very much like those proposed changes. Yeah. Well, it makes sense. And here's the thing. If they're going to give incentives, why wouldn't you? So yeah, I'm okay. I'm okay with that. All right. Scratch. I'm personally on white rice and ramens. Nice. Let's see. Wealthsimple is completely insured for up to 200K. Any more than that, and open up another account at another broker. And that's something you can do, guys. Like, you don't have to put all your eggs in one basket. So what Skiz is saying here is really good point. So if you have 200,000, well, you're fine, with Wealthsimple. But if you had 400,000 and something happened, well, their insurance would only cover half of that. But it doesn't say you can't have 200,000 at Wealthsimple. Maybe put the other 200,000 at I don't know, Quest Trade or National Bank or heck, even Royal Bank if you know. But then again, you're going to deal with commissions at that one. And there's other ones out there as well, but look, yeah, the insurance is definitely important. And when you have insurance of that amount, it doesn't. If you're worth more than 200K, it's not a bad thing to split it up. All right, Cowboy. The one Canada thing is bull. Let thing be built by experts. Nobody wants to build because the government is the issue. The government stopped oil and gas development. Keystone Energy East. Yeah, the government has been an issue. And not just the federal government. All three governments, so federal, provincial, municipal, they've all gotten in the way. So we kind of need a unilateral step back from government and let things get built. Yeah, no, I'm okay with that. That to me that makes a lot of sense. Claude said, I thought investments were protected up to 1 million. I think if you look carefully, I think their insurance is, I believe Skits is right. I believe it's 200,000, but double check. I haven't looked at that in a long time. So, but that does sound right, but I could be very, very wrong. Let's see here. Now, KT says they're protected up to 1 million. Yeah, double check, guys. Double check, because, you know, I've heard 200,000 before. But, you know, double check. I honestly don't know. I would have to double check. Let's see. Paul says, good afternoon. You know what, guys? Why don't we do this? Let's just do this. Let's bring up here. Let's see here. Google. We'll bring up Google. Wealthsimple insured for, let's just see. Let's see. Cash balances of up to, well, that's cash balances. I want more than the cash balances. Here we go. Some insured values here. Now, this is Reddit. I don't particularly like. 1 million per account. Questrade has insurance up to 10. Maybe here's a source that gives us that 1 million. So KT, you might be right. You might be right, but if it's just cash, so if you're holding straight up cash, it looks like it might be 100,000. Let's see here. I'm just going straight to Wealthsimple to see if they. All right, so let's see here. Balances up to 100,000 will be covered by CDIC. All right, and let's see here. And here's something about their $1 million coverage. Let's see here. Combined CDC eligible coverage amount up to $1 million instead of holding your funds. All right. Well, this is interesting. Note Wealthsimple save account. So and this is, I think, where the confusion comes in. So from the looks of this, if it's the save account, which is, I guess, now their checking account, because they changed the name of that, you're good up to $100,000. But it sounds like investment-wise, you're probably okay up to 1 million. But if there's any further confusion, I would reach out to the horse themselves and get on chat with Wealthsimple just to get it clarified. But just from looking at this, oh, holy banana bread, guys. It's just me and a big green screen. All right, that's embarrassing, isn't it? Let me pull that up here. Let's see here. Frequently asked questions. Here we are. There we go. This is what I was looking at here. Yeah, this frequently asked questions over here. Oh boy, I can't believe I did that. Actually, I can believe I did that. I get so excited and going into the data that, yep. I did it. All right. Okay. Cowboy says, funny how the government wants to stop internal combustion engine eliminated and the electric vehicle mandate. Do you really believe they are going to fight against those plant closures? The whole EV thing, you know, right now we don't even have the grid to support it. That's the thing. I'm okay. I mean, I'm okay with EV vehicles, but I do think that at least for the Canadian environment, there's a lot more improvement to that technology that we still need. Like, for example, you want an EV that's not going to lose a lot of its performance in -40 temperatures, because hello, Canada. So yeah. Yeah. And I also don't think, I think they have to be a lot less strict. If they want to mandate any kind of an EV mandate, let's be a lot more gradual to it. And I would rather, honestly, here's what I would rather see. Instead of saying you have to have X number of vehicles EV by such and such a date, I would rather just see incentives. Like, you know, if you switch to EV, maybe they give you a tax break. I would be much more okay with that, and let people decide to move to EV vehicles Tax breaks will certainly help people lean in that direction. So we'll have to see. We'll have to see. Skiz says, oil best for money, nuclear best for efficiency, solar the best for actually being green. Yeah, solar. I mean, I love solar, no doubt about it. And here's the beautiful thing with solar. I was watching something on YouTube the other day, and they were just mentioning about the cost. Like the cost in solar panels has come down so much. So they're getting to be a cheaper option. They're definitely getting to be a cheaper option. And solar is good if it comes with some kind of an energy storage system, because obviously, you still need power at night when there is a lot less sun out there. We get a little bit of sun at night, but not enough to do anything solar wise. And for anybody who's right now saying, "Wait a minute, Candace, we get no sun at night. It's the whole point. It's night." The moon. We get reflected sunlight off the moon, so we get a little bit of the sun at night, except for on a new moon. And even then, there's probably still a tiny something. But anyway, Silver Bear. Anybody else buying the U.S. weekly dividend stocks? Well, speaking of the U.S. dividend stocks, I have promised to make a U.S. dividend list before the end of the year. So I will be looking at those a little bit harder for sure. Now, the next video, so Tuesday's video, channel members, you'll be able to see this tomorrow. We're not looking at any ETFs. We're not looking at any stocks. It's been long overdue. We need an education based video, but it's a good one. We are going to be looking at how covered calls work. Like, we're going to look at everything. I think it's a good video. It's one of these questions I get asked a lot, like, how can they pay such high yields? The other question, and this will be addressed in this video as well, is, well, with return of capital, how come they don't go to zero? Because if they keep giving you back your own money, aren't they going to eventually get to zero? Well, no. And that's explained in the video as well. So this is a good one. I'm looking forward to it. Rory says, let's see, solar was useless in Texas when the Dallas blizzard hit. Oh boy, yeah. Ian says, I thought the insurance was $200K per account, but I could be wrong. That was what I thought too. Yeah, Ian, here we are. I thought that too. I actually thought that too. And I think it was at one point. So that's what I'm saying. There was this whole thing saying that they're able to offer up to $1 million coverage. So I think we have to look into that a little bit deeper. Probably live on the air is not the best time to look into it. I'll dig into that a little bit deeper. If you guys ask me again next week, I'll have a definitive answer. Let's see, politicians, 100,000 only in Canada. Ian, what does the insurance cover? A hack, Wealthsimple running away with the money? Yeah, it's going to be that type of thing. And once again, I would want to read a bit more, find it exactly. I haven't read the small terms on Wealthsimple. But yeah, if Wealthsimple were to, let's say, for example, Wealthsimple went under, it would cover something like that. Will it cover a hack? That's a really good question. I think if it was a situation where if Wealthsimple got hacked, probably it would cover you. But if you got hacked, it might not. So there might be a distinction in there. I would have to look, once again, I'll have to look deeper at that to get that information, because I don't know it off the top of my head at all. Yeah, what can I say? What can I say? Cece says, ridiculous when we need 1 million to retire normally. I know. And there's a lot of people out there that think $1 million's not enough to retire. I could retire on $1 million. I could retire on $1 million. I'd be using. I would basically turn that $1 million into an income generating strategy for sure. And I think I could do very well with it. All right, let's see. Michael says, hello, Candace. Have you noticed the bounce in Parkland, whose official takeover by Sunoco is getting closer? No, I have not. Let's take a gander. Michael. Let's see here. I think it's PKI. I don't know why I even typed in Parkland, but no, yeah, look at that. I'm just gonna come back here. Yeah, a little bit. I mean, it's not a huge bump, but we do get a little bit of a bump for sure. That'll be interesting. Yeah, I know that there's a few merger things that are that are getting a little bit closer for sure, and this is definitely one of them as well. All right, let's see here. Cowboy says solar panels take a lot of oil to produce, plus they don't get here by rowboats. Not here. There's probably some fishing villages in Nova Scotia where they might ship them by rowboats. But yeah. Ian says you should stay in that small bubble and make it bounce around like a screensaver. That would be kind of fun. That would be fun. Stay in the bubble and see if I could just move it. I wish I could just grab and drop. Like, I wish I could actually just drag and drop the bubble live. You might need, well, they probably need something like Ajax built into the browser to do that, but that would be kind of funny. Ooh, and then we could have a sing-along and we could have my bubble head going, bouncing from word to word. Gosh. If only. Now, I kind of want that now. Let's see. Cowboy says you live in a city. You have public transportation. Those of us in the country require dependable transportation. Yeah, 100%. 100%. And it's not even just that. I mean, you take somebody who lives really, really rural, you know, how many charging stations do we have up in, I don't know, I was thinking Timmins, but let's go further north. You know, if you're up in Nunavut, I mean, I don't think you're going to find any charging stations. Yeah, absolutely. Jay says GM and Stellantis took advantage of taxpayers' money here in Canada. Classic dine and dash. Yep. Funny dine and dash story. I've only done it once. And it was against my will. I'm going to put this out there. But it happened in Vancouver. A funny story. Me and Jill and a guy by the name of Dave. We went out. We enjoyed a nice night at this pub type thing. We had a few drinks, had a really good meal, and we told the waitress we were done. It was time to bring us our bill. And we waited, and we waited, and we waited. We waited. It was easily, after about an hour of waiting, Dave was kind of like, I've had it. I'm just leaving. If they can't bring me the bill within an hour, I'm leaving. And Jill was like, yeah, we should leave. I was just like, no, we should wait. It's the right thing to do, is to wait and to pay. So they left, and I stayed there. I was like, I'm gonna wait. But then they came back about 20 minutes later, and she still hadn't come. And finally, I was just like, all right. So we left, and I felt so guilty. And the funny thing is, so we're walking away from this place, and we walk down this side street, and all of a sudden, out of the blue, this cop car comes up, and it's got the sirens going, and it pulls up right behind us. And I'm like, oh dear God, we're going to jail. But I don't know what they were doing. They had no interest in us at all. It must have been something else. This was in Vancouver, so. But anyway, that was the one and only time I've ever dined and dashed. And, you know, it was just, I get it. If somebody can't bring you a bill in an hour when you've told them we're done, we're ready to go, bring us the bill. If I was a judge, I would probably say, okay, yeah, okay, you're fine. I wouldn't send someone to jail for that, but I still feel a little guilty. Politician says oil, especially for Canada, is where it's at. No pipelines in the new budget. Yeah, I want to see a pipeline. I really want it. You know, I know that, a second pipeline going from, Alberta to BC would certainly make Danielle Smith happy, but I really want to see my West East pipeline. I really want to see it. I don't think I'm gonna, but I really want to. An episode on U.S. weekly pairs could be a good video. It might turn out to be all U.S. weekly payers, but yeah, I've had a lot of requests for the U.S. one, so it's gonna happen. It's gonna happen. Um, it's probably gonna be a November video, to be honest. Cowboy, how are those EV battery plants going? Or how are they doing? That's a good question. You know, they certainly have a lot of money. They got a lot of extra funding, but that's the thing. That is the thing, right? Let's see. You can't bankrupt Canada if you allow it to have a GDP. By rowboat. I still love the thought of solar panels being transported by rowboat. Paul says, I'm looking at total return of Harvest TLSY versus TLSA and Harvest PLTE versus PLRT, and the cover call ETFs win if I reinvest all, at least from April 7th, 2 days before the Trump pump. Okay, well, what are the results? Or you just, or did you not yet do them yet? I don't know. I don't know. I haven't run the data on that, but that would be interesting. Skiz says, Ben Felix has put out a reply to his original cover call ETF. Are not income really good info for those wondering how cover call ETFs work? Good old Ben Felix. I know that there's been a little bit of a controversy after he did that. And oh boy, let's see here. Cover call. Solar is really getting hurt down south by housing panel installers. They're charging outrageous 10 to 50K per house and bankrupting homeowners. Sad CBC story on it. Interesting. Yeah, I haven't heard anything about that, but yeah, that does sound a little crazy. Skiz says I could retire on 300 to 400K. I've run the numbers. Yeah, and it also depends, like where you want to retire. So if you want to retire in Vancouver, you're going to need a lot more money than if you want to retire in Annapolis Valley, Nova Scotia. You know, it all boils down to where you want to retire. Cowboy, $1 million won't get a house in many cities in Canada. True, but if you're retiring, you should hopefully, maybe not, but you might be in a situation where you already own your house, which is fantastic. Or, if you're rent, or maybe you're a renter. I mean, who knows? I will know. I know my mom had a house, but she sold it because it was just too much upkeep. But, she's got enough money in the bank that'll keep her going for at least for the rest of her life, unless she decides to live to 120, then she might have an issue. Let's see. Philly says, I want to buy Cameco, but it's very expensive, so I'm considering buying a new cover call ETF which only invests in Cameco with a good dividend, only $14. Is it a good choice? Yes and no. I'm going to give you both sides. I'll give you both sides. So I like the ETF. The ETF will go up in value. You're going to get monthly income from it. That's fantastic. But it will have upside. It will have its upside capped a wee bit. So if you were investing in Cameco directly, like even if you did fractional shares, I don't know if they have they need to get a CDR out for, actually, well, they wouldn't because it's Canadian. I was going to say a CDR, but yeah, if you were investing fractionally in Cameco, you would still get all of that upside potential. Because I think uranium is going to do really, really well. However, I still think the covered call ETF, if you're reinvesting it, you're going to do well. You may not hit the same total return as Cameco in the end, but it is a much affordable parcel for sure. And it could be interesting. It could be interesting. It's kind of that whole thing, because keep in mind, when it comes to covered calls, it is a trade-off. You are trading upside potential for income now. That's what they're all about. So you have to keep that in mind. Now, one other option is there are a lot of the uranium ETFs. A lot of, like we looked at one, I think on the, not on the weekend, but on Friday, I think we looked at one and about 17% of its holding was Cameco. So a lot of them are holding Cameco. So you would get exposure that way as well. All right. Tanner says, hey, Mountain Canadian here, hoping my SoFi calls print this week. Ah, SoFi. Ah, yes. Well, maybe. Oh, let's see. Bismarck, he says, getting close to ex-dividend date. Time to buy some cover call ETFs tomorrow. All right. Nova Scotia here. Ah, fantastic, fantastic. Of course, as you guys know, I'm from Nova Scotia, so I do appreciate. I like our Nova Scotians who pop into the chat for sure. Jonathan actually is he's a Nova Scotian. You guys know, am I late, Jonathan? So yeah, I have a fond place in my heart for Nova Scotia for sure. All right, let's see here. Don't do it, Candace. Admit to nothing. I know, I know. Rory, don't you dare. Don't you dare. Part of me says maybe you should, but Skiz, all right. Paul, only issue is if you bought Tesla at 488 and TSLY on the same day, they haven't fully recovered yet, but TSLY still wins in total return. What does Ben Felix say to that? Oh my gosh. You know what? I don't know if he would ever agree, but he would be a fun one to get on to into one of the conversations, into the this week conversations. I'd love to bring him on and just have a good debate. Have a good debate about it. Rory, let's see. Liberals can't bring us to the bill on November 4th. All right, let's see here. Lisa is in the house. Ho, everyone. Sorry I'm late. I was visiting with my mother. Oh, nothing wrong with that. Always fun to visit with mom. Let's see. A review of blocks versus HBTE. Ooh, that could be interesting. That could be interesting. All right, let's see here. All right, and guys, I'm at that point too. I am getting behind now. 4:55. I'm only 6 minutes behind. I'm 6 minutes behind, but I may just skip over if you're talking to each other. I'm gonna skip over that. All right. If the provincial governments included some First Nations into the payout scheme, the feds would jump on it and the pipeline would get done, but the greed is real. Yeah. Yeah. No, absolutely. I mean, I like seeing First Nations included. But yeah, like give them some real money. I mean, if they were getting real money in these deals, do you think they would be protesting them so much? Maybe they would, but I don't think they would. And that's just my opinion. I could be wrong, but I think if they were getting real money, they'd be on board. Let's see here. April 7th to now, TSLY 89% versus TSLA 81%. Interesting. So yeah, in this case here, it looks like the covered call ETF is gonna win out here. PLTE 160% versus PLTR 149 total return. Interesting. Okay, let's see here. Let's see. Home equity tax, the next great thing from the Liberals, having to pay more for your own property. Oh God, that's the last thing we need. Gosh, coffee is so good. Skiz says, Philly D, listen to what Candace said. She's 110% correct. I think I was 111% correct that time, Skiz. But yeah, who's counting? Let's see. Rory says, I see 29 likes, Mary. 29. We were up around 70. Right now, I think we're at 62. Oh, guys, come on, throw a couple likes my way, would you? Give me a break. A couple of likes. And you know what? Likes are blue, like the Blue Jays. So, in a way, if you throw a like, it's like you're supporting the Blue Jays. Yeah, that's BS, guys. Don't click the like button if it's just to support the Blue Jays. But go Jays, go! And by the way, if you've noticed, let's actually go big. My sign is in the blue. I'm keeping it blue till the World Series is over. Go Jays, go! They did lose yesterday, but you know what? Last series, they left Toronto down 2 games. This time they're leaving Toronto in a tie. So all they really need to do is, just hold their heads high, play good ball, and they'll bring it back. They'll bring it back. All right, Cowboy says we need a sacrifice according to Super Banker. Okay, I no idea what that meant. Al Jones says, another blue noser here. Now we know why you are smart. The blue nosers. Gotta love it. So yeah, that's in case those of you who are not from Nova Scotia, that's one of our nicknames because of the blue nose, that famous ship on the back of the dime. At least I think it's still on the back of a dime. I haven't actually seen a dime, and I couldn't tell you how long it's been since I've seen a dime. Skid says, Paul, you trying to make me rethink my entire reality? Paul Garon says, like. Thank you, Paul. I appreciate it. Michael says, according to the Financial Times, Trump's personal crypto empire generated over $1 billion in pre-tax profits in the past year, driven by soaring digital asset markets and his stake in DJT. Yeah, I mean, Trump he's been making a lot of crypto money. Like, there's no doubt there at all. So, yeah, a lot of money. Oh, boy. And it almost... It almost feels, it kind of feels illegal, but when it comes to Trump, I don't even know if illegal is a word in his vocabulary. Super banker is Monty Burns. Okay, okay. Ah, yes, excellent. Bismarcky, we are going to parade up Bay Street when the Jays win the World Series. Nice. Nice, yeah. That'll be cool. That'll be so cool. Let's see here. Hello, all. Happy Sunday. According to Dorpat. Hello, Dor. Good to see you. When will Amazon turn around? Oh, Amazon. Well, we are heading into their busiest season. So as we move towards the holidays, obviously you got all the Black Friday stuff in November, and then once we move into December, so definitely by the end of the year they should be looking a lot better. But we are moving into one of their big seasons for sure. Let's see. Skiz says, yeah, Eric Trump was on iced coffee, and yeah, he said some wild. Was he actually on the iced coffee hour? That's the one that is with Graham Stephan and Andra Zik. I did not know he was on that. That's hilarious. Have you ever done a video on the bond market? One. I had one video on bonds. And I think I also did a channel member live once on bonds, but I haven't really talked a lot about bonds. And it's kind of interesting. I think it's just that bonds have become a lot less popular than they used to be. Like a lot of people, when it comes into, even with their fixed income, a lot of people are moving away from bonds per se. But at the same time, I do want to do another bond video. I just haven't yet. That's probably, and to be very honest with you, Paul, probably won't happen until 2026. Dorpat, like Graham kept a straight face listening to Eric. Oh my gosh, I'm actually caught up. I'm like, wow, this is great. Yeah, that's kind of interesting. Definitely kind of interesting. I don't know. It's fun. That's kind of fun. Oh boy. Speaking of weird, I don't want to say weird, but speaking of some of those collaborations, as you guys know, Adriano over there on Passive Income Investing, he has this new thing called PII Pioneers. So they did this one, him and a bunch of them all came out for a video. I haven't watched it yet. I've been meaning to watch it. I got to watch it. I have to watch it. But yeah, he wants me on the next episode. So I have agreed. I don't know yet when we're going to be doing it. He said he'll let me know. But yeah, that'll be kind of fun. So that's one of those things coming up. Another thing coming up on the channel too, and I got no idea on the time frame of this, is I'm going to interview the CEO of Evolve. So that'll be coming up. Now, I have to come up with my questions, and then I have to pre-submit it, and that has to go through the whole process with them. But that'll be interesting. That'll be fun. I look forward to that. Let's see here. Jay says, I don't get this drama with income versus growth investing. All it takes is a black swan event or 1929 market crash, then nobody wins. It's true. And this is the thing, Jay, and I mentioned this before. When you look at the divide, both sides are arguing correct information. That's the funny thing. It's a weird thing when you have two sides arguing against each other and they're both right. And it's true. So the income investors, their biggest problem is that they look at covered calls and they look at that loss and upside potential and they're like, why would you do that? You'll make more money long term with just, non-covered call stuff with with your dividend growth. And they're true. They're right. Yes, you will. You typically will. But they're not looking at what income investing is about. And with income investing, yeah, you guys know that you're losing upside potential. Well, hopefully you do. But it's about that income. It's about that income. It's about what you're doing with that income. It's about what that income is doing in your life. It's about what your investing needs are. If you're in retirement, that might be the money you're living off of. So they kind of don't get that. They don't kind of understand that point. And that's where there seems to be a little bit of a divide. Now, I'm more of a a growth income investor, which is that hybrid spot. I'm in that middle spot, so I can see both sides clearly. And I can see both sides are right, and that's kind of that funny thing. So it's not a situation where if I had a dividend growth investor arguing with an income investor, it's not like I could sit here and say, okay, look, oh no, you're wrong, you're right. I can't do that. It's like you're both right, but it's just like I think both sides kind of need to just take a moment, and look at the other side and kind of get where they're coming from. And if they could both understand it, I think it would be a lot better. But unfortunately, sometimes we get these divides, and I know JJ was telling me that he sees it a lot on Blossom. I don't, but then again, I'm only looking at the feeds of the people who follow me, and I'm following them back. So mostly you guys over there on Blossom, that's who I look at. So I don't see it with you guys. Of course I wouldn't. Let's see, Graham, I don't work here. Would be interested to learn about a covered call like HHIS or HBTE in a non-registered account. Let's say VDY or XDiv. Yeah. I mean, the big thing is in a non-registered account, and this is what it boils down to. We kind of it's funny, we actually covered that on the last channel member live stream. So, oh gosh, and I have a really wonderful slide that it's not fair to the channel members if I go to it right now, because that was theirs. I can't take that away. But in a nutshell, when you have a dividend that's coming from something like HHIS. So, well, here we'll do our own, but I'm not going to do it as detailed as them. But when you have HHIS, and let me first of all, whoops, that's speaker view. I don't want speaker view. I want share view. All right, share view. Let's go over here and let's go to the whiteboard. There we go. All right, so when you have something like HHIS, I'm just going to pull out a marker here. All right, let's pull out HHIS. All right, so first of all, HHIS, it holds a basket of other ETFs. So it has all of the different high income shares. There's a whole bunch of them. So what you're going to get is most of them are US stocks. So you're looking at a whole bunch of things. Like you've got NVIDIA, you got Microsoft, Amazon, all of them. You got all of them. You have a few things that are not tech, but so when you're looking at your dividend, and we'll come here to div, DIV, that dividend is going to be made up of, well, one, there's going to be, I'm going to call it foreign income. F-O-R-E-I-G-N. Yeah, okay. Foreign income. Anyway, that's because I'm writing with the thick pen. I shouldn't be writing with the thick pen. So you're going to have some foreign income in there. However, when, and I'm putting this kind of as a, I'm putting this here as kind of a special thing. I'll put a little asterisk. So let's leave it here. I'm going to get back to the foreign income. All right, you're going to have, believe it or not, you will have some eligible dividends in there. Actually, no, you're not. You're not. Hold on. You're not. And I'll tell you what, I was thinking, this is what I was thinking. I was thinking eligible dividends because I was like, wait a minute, RMAX, but that's a totally different thing. That's, for one, that is HYLD. And for two, it wouldn't have eligible dividends because it's holding Canadian REITs, which are 100% taxable. So let's just get rid of that. So, you're not going to have any eligible dividends. So you're fine with that. You're going to have foreign income. You're going to have capital gains. So I'll just put CG. You're going to have return of capital in there. So these are going to be some of the bigger ones that you're going to have. Now, with the foreign income, okay, a lot of that, depending on Harvest will have different deals with the IRS. So they will, they'll have very low, like they may not be paying 15%. They might have a deal where they're paying 5%. They might be 5%. I don't know exactly what they're paying, but here's the thing you have to look at. That 5%, that foreign income, it's not on the whole dividend. So if they're paying, HHIS was paying, let's just say 15%. I'm just going to say 15%. If their yield was 15%, and guys, I don't know what it is off the top of my head, but if it were 15%, of that 15%, how much of that is actually dividends? Well, when you look at a lot of these tech players, some of them don't pay dividends. Some of them pay very small dividends. So you might have 1 to maybe 2%, if that. That would be the only part that would be subject to whatever the deal is they have with the IRS. And if it's 5%, you're looking at 5% of 1 or 2%. That's very, 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 very little. So you're not paying very much at all in that case. So when you look at it tax-wise, this foreign stuff, I wouldn't even put it in. I wouldn't even put it in your equation. It's going to mostly be capital gains and return of capital. So what happens with capital gains? 50% of that is taxable income. So 50% of your capital gains. Now your capital gains will be the smaller component here. So when you look at it this way, capital gains, ROC. So most of it is going to be return of capital. So what that means is that return of capital, all it's going to do is it parks the taxes because it will reduce your adjusted cost base. So your ACB, your ACP will go down. Not a lot, but it will go down. And it's funny, I'm actually going to talk a little bit about return of capital and ACB. I'm going to talk about that relationship between them in Tuesday's video. Tomorrow, if you are if you're a channel member. So, coming back to this, so if you're holding it in if you're holding this one, if you're holding, HHIS or HBTE as well, yeah, absolutely HBTE. If you're holding either of those, so and let me just take a look at HBTE for a second. HBTE. So in this one here, this is your Bitcoin leaders. So it's going to be a lot of mining companies. So you will have different things like HUT and things like that. You'll also have Coinbase and you'll have strategy in here. So it's going to be a similar story. It'll be a similar story. We're going to still have that same kind of thing. And you're probably, once again, the foreign, I wouldn't worry about it. So it's going to be, once again, mostly capital gain, return of capital. So this is a pretty tax efficient. They're pretty tax efficient for being outside of a registered account. But let's say, for example, if you made 1,000, we'll just say 100. Let's say you made $100 in dividends. I'm using 100 because it makes a lot. This will make sense in a moment. Well, of that $100, about, I will say, let's just say roughly 70%, you're probably looking at about 70% ROC. And you might be looking at maybe 25% capital gains. Now, with HBTE, though, it might be higher. It might be more capital gains because of the explosive nature of Bitcoin's growth. But let's just say it was this. So that means of that 70% is not going to be taxed right away. So you're left with $25 that will be taxed. Capital gains, only half of it will be taxed. So in this case here, it's going to be what, $12.50. So $12.50 of that $100 would be taxed that year. This ROC, that's going to go into your drop in adjusted cost base. It's not like it's not like they're going to say, okay, well, that's $70. We got to knock that adjusted cost base down by $70. Well, no, of course they're not going to do that. It goes down a little bit. It's not like it's not a very linear relationship. And return of capital, it's not even what I hate the name return of capital. So return of capital makes it sound like they're giving you back your money, and they're not actually doing that. It's not really your own capital that's coming back to you. It's more of a catch-all phrase that they use for basically for tax purposes. It's a way of sort of deferring taxes within a fund, but it doesn't actually mean, and that's why a lot of times when people are like, oh, if they keep giving me back my own capital, it's going to get to zero. My adjusted cost base will get to zero. It's not going to get to zero. They're not just handing you back your own money directly. It's because you got to look at it. Like if that were the case, where is this money coming from? So this, this $100, where is this coming from? A lot of that is not coming from, well, it's coming from two areas for this here. One, it's coming from the growth, of course. You got the growth. You also, well, three areas. You also have the dividends because this one does have dividends. A few of the companies probably have dividends. A lot of them don't. So dividends would be small, but growth. And the other thing is, of course, the premiums. That's where the most of the money is coming from, is those premiums. So if you think about it, why would those premiums result in something called return of capital if they were giving you back your own money? They wouldn't. It's just that is a term that's used. And I explain it in the video that's coming out, the next video. So anyway, all right, let's jump back. Now I'm probably really far behind. Let's see here. Now, some of the new ETF pay much better than bonds and stocks. Yeah, absolutely, 100%. Skiz says the 60-40 split for bonds is no longer supported by any financial institution. Yeah, and it has changed. It's changed a lot. Bonds have lost a lot of their popularity. There used to be little formulas based on how old you were that would determine how much fixed income you should have. And the reality is, on the income side, if you're an income investor and you're using it to produce income in your retirement, your fixed income numbers, there's some. I think actually Adriano says you don't even need any fixed income. I like to have a little, that's just me, but you don't need as much as you probably think you do. Philip says, the winners get richer when there are crashes. All the stupids lose by selling. Yeah, it's that cycle of fear, uncertainty, doubt versus FOMO. People who don't have emotional control in the market, they tend to, instead of buying low, selling high, they buy high, sell low. They completely flip it around. So the more you can learn, the more you can understand the market, the more you can understand your emotions. Like understanding your own emotions going in is a really good thing. If you don't think you can control your emotions, that's when you definitely 1,000,000,000% should have a plan. And sort of say, okay, I have to follow my plan. I can't, I know I'm scared, but I need to follow that plan. That'll save you. And if you can't do that, well, you might be one of those folks who need to have somebody else investing for you. So if you're that type of person, a financial advisor, absolutely the way to go. If you cannot control your own emotions and you're going to be prone to throwing money away like that, oh gosh, yeah, you want somebody in there who's doing it for you. CC, just found out about the stock black market. Orders done by major players that don't move the price. That'll make a good show. The stock black market. CC, I have never heard of it. I will admit, this is a new one for me. Maybe interesting. That's very interesting. I've never heard of that. Skiz says, I buy and hold, and my best keeps growing and growing, but I'm not really enjoying my money right now. If I switch to income, I'd grow less, but I could take 2 trips a year, Yeah, yeah. I mean, it comes down to utilizing. And the whole thing is, do you need your money now or do you need your money tomorrow? And when I say tomorrow, I'm talking many tomorrows. That's kind of one of the big differences too, as to which type of investing you should be doing. I mean, if I was 20, I was just starting out, and I had enough disposable income coming in. I wouldn't even look at covered calls, to be honest. I wouldn't. Now, doesn't mean that it's wrong if you do, but I would then, in a case like that, I probably would go full on dividend growth investing. Just max it out as for, especially with that kind of a runway. That's how I would go. But you've got JJ. You guys know JJ. He's in his 20s and he's full on income. And that's okay too. That's okay too. Sometimes the psychology of receiving money keeps you motivated. So, with regular investing, so with a dividend growth investor, you're investing and it's kind of like, it's very boring. It's a boring way to go for sure. But when you do look at it through the lens of dividend investing, getting those big paydays all the time and all these dividends coming in and all these notifications of dividends, it can be kind of a motivation, especially during a bear market. When all you're looking at is red, but you get that email saying you got a dividend. That's not a bad thing. That's not a bad thing. Best keeps equal a nest egg. Michael says, I read that DJT has $2 billion more cash and more assets. That doesn't DJT undervalue. That should be trading higher than BMNR looks over value. I don't know. I'm always going to be leery of DJT. And I know I've heard stories of people making some half decent money with that, but at the same time, it still feels like a giant pump and dump by Trump. And I maybe I'm wrong. Maybe I'm missing out an opportunity, but I can't. It's that one stock. Stock ETF. I'm just not going to, or coin, I guess, crypto. I'm not going to touch it with a 10-foot pole. I just will not touch it at all. You guys can touch it if you want, but I'd be really, really, really careful. Cowboy, I'm enjoying the income in TFSA and growth quarterly in non-registered. Yeah, exactly. That's kind of that's the hybrid approach, right? You've got your income, usually in your TFSA, producing your tax-free income. Your RRSP, really, there's no point in having income in your RRSP, honestly, because everything you get in your RRSP is 100% taxable. So for your RRSP, you just want to go with whatever is the biggest total return for your buck. That's it. If you're using your RRSP, you may not be, depending on how much money you have, all of that. There's a lot of different factors in there for sure. Let's see. Yeah, a hybrid could be the best idea. I think it is. I like it. I like the hybrid. I like it a lot. There's JJ. HHIC, yes, eligible dividends. HHIS, nope. Yeah, HHIC, yeah, that one's going to have eligible dividends because it is all Canadian. You got to love it. Got to love it. Scratch. Personally, I want to trade when my long-term dividends don't find anything attractive to invest in. I don't have the time to watch the market. Buying at a low cost and waiting seems the play for me. Yeah, there's a lot of different plays. And, we're talking investing, but if we switch over to trading, that's another story altogether. You know, if you're a swing trader, a day trader, that, you know, I mean, day trading is tough. Swing trading not as tough. Still takes a little bit of skill in there as well. But and speaking of swing trades, my swing trades are available to the channel members. So I do send them out regular not emails, but community tabs. And then the community tab, I think YouTube then emails them to let them know that there's a new tab, a new community post for that. So yeah, they do get that information. One of the benefits of being a channel member. Cowboy, my thought is Canadian stocks get a better tax deal in my non-registered. TFSA is not taxed, so income is bigger and better tax-free. Yeah, I mean, here's what I keep telling some people. If you don't have a lot of money and your TFSA is really big, so you got a lot of room in your TFSA, like if you've got the full 100,000 in your TFSA and you've got 40,000 and you're thinking, well, how much of this should go in my RRSP? Well, really none of it unless you want to invest in some high-paying American dividend stocks. Those would be better off in your RRSP because of the whole withholding tax. Now, the other, and this is the other thing. The other thing I will say put into your RRSP is if your job does RRSP matching, you want to do that 100%. It's free money. So whatever the limit is that the job has. So most jobs will have a limit. They might say up to $50 or up to $100 a paycheck. And then they might have another max. They might have a max for the year as well. They might say up to $100 a paycheck will match dollar for dollar up to $1,000 a year. So if that's the case, you only want to contribute that $100 for 10 months, right? Because that'll get you to that max. But that's free money. That's like 100% return on investment before you've even started investing. So you got to go with that. You got to. Scratch says, I'm working to retire only with my TFSA. Nice. Let's see. My strategy is to replace my current job with dividends. That is what I'm focusing. And once I have enough buffer, I'll buy like XEQT. I don't have much funds to go around at this time. Okay, fair enough. Yeah, I mean, that's the thing. Robin Haney. I don't know if you guys know Robin Haney. He's another YouTuber out there, Canadian financial one. He used to do this thing where he would show his portfolio and then he would show you the dividends on his portfolio. Now, he's not an income investor. He was just looking at regular dividends on growth dividend stuff. But he used to always like to compare it to what he could buy with them. And I thought that was always kind of a neat thing. So that reminds me of what you were just mentioning there, Jay. Like, you could conceivably replace your income with dividends for sure. That is, and that's kind of that goal in retirement, right? You'll still have your pensions in that, but here's the beautiful thing. If you've got a really good dividend, let's call it a dividend farm. You got a dividend farm set up inside of your TFSA. That's all tax-free. So it's not impacting any of your supports. So you're not looking at clawbacks on your OAS. If you don't make a lot of money, well, outside of that TFSA, if you don't make a lot of money, you might qualify for the GIS. And that TFSA money won't impact that at all unless the government does something stupid and changes that. But how often does the government do something stupid? Oh boy, I should never ask that question. Not with you guys. Cowboy, hopefully we hopefully we can. We can all maintain our lifestyle on our investments. That's the goal. That is the goal for sure. Skids, takes a large amount of capital to replace income with dividends. It does. It sure does. Thanks for your explanation, Candace. I really appreciate that. Well, you're welcome. Let's see here. Two similar color-called ETFs, one in Canada and one in the US. Since June 7th, HBTE yield 19% versus Block's yield of 36%. Total return on HBTE 87% versus Block's 52%. There we go. And that's important. Paul, actually, you know what? Let's come back here. I like what you just did here, Paul. So I'm gonna grab a smaller one here. All right, so we got HBTE. Here we go. HBTE on one side, and then over here on the other side, we got blocks. So I always talk about total return. So when you look at this from the surface, you might be looking at these two funds and say, okay, HBTE is giving me 19%. Fantastic. I like that. Then you might look and say, oh, but look at blocks, 36%. Oh boy. A lot of people would say, that's great. I'm going to blocks. I'm going to blocks. Of course, with this type of U.S. Situation, you're going to have to put that in your RRSP. So you're going to get taxed on it 100%. But Paul took it another step, and looked at the total returns. So with HBTE, we're looking at 87%. And with blocks, oh boy, they're not growing very much, are they? 52%. So when you look at it from the total returns, it becomes clear. It becomes very clear. HBTE absolutely kicks blocks. Why? Well, when they're going with blocks coming out with such a large distribution, I think they're undermining their own growth. I think they're it's kind of like they're sacrificing everything to get this distribution. So with HBTE, they're not. HBTE is kind of like they're actually looking at the fact that there's going to be upside. So you're probably looking. So with the covered calls on something like over here on blocks, they're probably they're probably at I would say they're probably at the money. So they're probably not giving a lot of room for growth. And I imagine, so we're talking strike prices. I imagine with HBTE, they're giving more room. They're giving the assets that they're holding a little more room to run before that upside gets capped. So if, let's just say, for example, let's say these were both $10. If these were both $10, what I imagine here, now this is speculation, guys, but I imagine when it comes to a strike price, this one, they're probably putting it not that much higher than $10. So it might be very close to where their price already is. And with this one, they're probably, maybe they're coming in at like $11 or something. So they're at least giving some room before that upside gets capped. And I think that's kind of what the difference is when I look at this data between HBTE and blocks. So basically, ATM versus OTM, the old battle, that's what we're looking at. All right. Now, whoops, let's come back here. Cowboy, the cost of living is rising faster than wages and everything else. It is. It really is. And that's the thing. When you are planning your retirement, right, you kind of have to sort of look ahead a little bit, and you have to make sure that your calculations include rising cost of living, because that is going to happen once you retire. That cost of living is going to continue to increase. And, imagine people who were making calculations before the pandemic. They probably were using all of the old data. And after the pandemic, and after, of course, all the aggressive rate hikes and all of this inflation and everything else, they're probably looking at their numbers and saying, oh boy, we didn't calculate this in our calculations. So it doesn't hurt. It doesn't hurt to, I like to be conservative in my calculations, but in a case like this, I would want to be very liberal in those calculations. If I think it's going to be 5% a year, I would probably look at maybe 7% a year in my calculations, just to give me a little bit of leeway in case we do have that one bad year in there. Lord Fubar is in here, and oh boy, late. Well, there's always the replay. Jay says, Skids, it depends. I don't have a mortgage or car payments. Hopefully, by summer, my goal is close to that. FOMO is real. That's why I dollar cost average. Dollar cost average. That is, every professional out there will tell you that is the number one way to succeed in investing. It is, because you end up getting that fair price. That's just what it boils down to. So good. Scratch says, this is just the beginning. It feels like they will print more money than they did with COVID to save the system. I want to disagree with you, Scratch. I want to, but I can't. Because, and when I talk about the, like, depression, I mentioned before in a recent, one of our recent shows, I said we'll probably never see another depression because the governments will not let it happen. And that's probably what you would see. You would probably see more stimulus, more supports, more money printing. It's like keep kicking it down the road. No government wants to own the problem. No government does, and no government will. It's just, unfortunately, it's one of the downsides to politics. It doesn't matter if it's the liberals, the conservatives, let's not even say the NDP. Come on. It doesn't matter which one it is. They're just going to kick the problem further down the road. Nobody's ever going to fix it. And that's the problem. Sometimes they talk about, you look at Polyev. Polyev says, we will have a common sense government. We will, every dollar we spend, we'll find a dollar in savings. Okay. In theory, yeah, you say that, and maybe you'll try, but you won't. It won't happen. It can't happen. Unfortunately, governments kind of work in that thing where it's not like, if you're short the money, it's not like you can say, let's just start canceling some essential services. You can't do it. It just will not work. It will not work. It's a good idea, but it can't work. Both whoever's in charge, they're going to kick the can. Unfortunately. Paul says Bitcoin is up at 113.3K, being kept above 13K for 2 hours now. Nice. Yeah, let's take a look. I have not looked at Bitcoin today. Bitcoin. All right, here we go. Oh, that's a heat map. That's WCP. Let's go to Bitcoin. Here we go. Oh yeah, look at this. Yeah, Bitcoin has had this nice little movement up here. We were talking earlier in the day about, about getting above 15,000. And I said, we could do it this week. I'd like to see that. No, Ethereum is up. I like that too. I like this for one reason. I've got a swing trade right now on the go with using Ethereum. So this is good news for that. I don't know if it's got me where I want to go, but it might get me to a point where I can at least throw in a stop loss maybe. We'll see. As long as I'm in the green, I'll throw in a stop loss and ride it up as high as it goes. All right. Scratch says, we'll see how deep in debt this government will bring us. We will soon enough. JJ says, I'm income growth for now, Candace, and investors' personal tolerance keeps adapting throughout different phases of their life, so I'll keep adjusting as life goes on. Oh, yeah. And that's the thing, guys. You can change. As your life changes, as your risk profile changes, your investing style may change multiple times over your investing lifetime. I mean, in fact, back in the old days, we're not talking that. We're talking 3 years ago. Typically, it was very generational. So if you were a new investor, it was pretty much dividend growth. Growth, dividend growth. That was the whole thing. Getting them total returns up, getting the heavy growth stocks because you got that long runway. Then as you move towards middle age, you would move more into the hybrid, that whole hybrid area. So, you'll start to bring in your higher dividends. You'll still have a core that consists of a lot of the growth stocks. And then in retirement, or at least as you move into retirement, you start shifting over to the higher income stocks and you create that income for retirement. So that used to be kind of a general thing. But now I think there's so much change out there and there's so much different that there's more than ways to do it. You've got things like FIRE. So that's, what is that? Financial Independent Retire Early, FIRE. There's a lot of different movements out there and there's more than one right way to invest. So, and that's the thing. There's more than one right way. And just keep in mind, the person across from you, maybe their way is a different way to invest than yours, but you can both be right. Lord Fubar, I take my dividends and buy more of my favorite growth stocks. Okay, nothing wrong with that. Nothing wrong with that. I know some people who, not me, but I do know some people that they like to take, they like to have one fund, so one ETF that they earmark those dividends for playing with the penny stocks. It's like, okay, to me that sounds kind of reasonable. Like if you really got that itching to play with some penny stocks and see if you can get lucky, well, maybe only do it that way. Have one fund. Like maybe if HYLD is one of your funds, you could take those dividends, maybe play with the penny stocks. But I won't do it personally. I'm going to put that out there. This is a if it's something you want to do. If it's something you want to do. Cowboy, disposable income, you're showing your age. It's discretionary spending since 2015. Oh, is that it? Discretionary spending. Yeah. Oh boy. Um, Raphael says, what do you think about POW? So POW is Power Corporation of Canada. Now, they're an interesting company. I will say one thing: if you can't invest in Wealthsimple, but if you want to sorta by proxy invest in Wealthsimple, investing in POW is the way to go. They're the largest shareholder of Wealthsimple. So I do like them. Now, they're a good growth stock. They have a quarterly dividend. Actually, here, let's pull up POW. I have not pulled them up in a while. No, that's not POW. That's Canva. Here we go. POW. Every time I say POW, I start to think of Batman. Remember the old Batman show? It's like pow, wham, boom, oof. All that fun stuff. All right. Power Corporation of Canada, here we go, right here. I'll pull up their 1 year, and as you can see, they're doing well. Utilities, right? Utilities does really, really well, and they have a good exposure. They have utilities within this company, and you can see right now, I mean, look at this. In the last year, they've gone from $44.94 to $63.71. Now, I will point out here, you're looking at a quarterly dividend, 61.3 cents a quarter. Not bad, not bad. It's a good company. Like, it's a good growth company. If you're looking for one, for sure. So yeah, I do like POW. Now my money is not in POW. My movement is actually in a different utility company, Fortis. I'll show you this one as well. But you're going to see a similar thing. Let's look at the 1 year. Similar thing to POW. Although POW, I will point out, POW had a more straight slope, a little bit less in the volatile area. But Fortis is mine, also a quarterly dividend, in this case here, 61.5 cents per share. But keep in mind too, I will admit, with Fortis, that was the first stock I ever bought. So I got a little bit of bias there. And also they are based out of Atlantic Canada, Newfoundland, actually near St. John's, Newfoundland. But they're North American. There's there's Fortis trucks in the U.S. and everything else. So what can I say? Skid says, markets are at all-time highs right now. Save your cash, build your dry powder. When it pops, crashes, you'll be in the best position. And that's the thing, yeah. We are at all-time highs. But the problem is, we have been at all-time highs for a while. And it's hard to guess when that's going to stop, when we're going to finally retrace. I do think a bear market's coming. I would have sworn to you at the beginning of the year, I would have sworn to you that we would have had it by now. But it hasn't happened. I've been wrong in calling a bear market in 2025. I'm going to call it in 2026. I could very well be wrong, but I mean, the thing is, eventually these tariffs are going to catch up. There's just so much that has to catch up to the economy. So it has to happen. It has to happen. But here's that question: when? It doesn't hurt to have some cash on the side. Absolutely not. If you got the cash, when we do go into the next bear market, there'll be a lot to pick and choose from. That's for sure. But nonetheless, if you don't want all of that rigmarole, dollar cost averaging is still a great way to go for sure. Let's see. Understanding Dark Pools article on Investopedia. I do like Investopedia. Once again, I've not really looked at dark pools. Now, is this sort of in relation to the whole black market thing that came up a little earlier? Interesting. Roy says, I have one redeemable GIC for such purpose. Okay, fair enough. Michael says, according to the Financial Times, Trump's personal crypto empire generated over 1.x billion in pre-tax profits. Michael, I read this already. You reposted this, but yeah, like I said, I'm still leery on DJT. I'm still leery. Yesterday, missing out on DJT. You're also missing out on the roulette table. There we go. They took Bitcoin down again. Wait a minute. Did Bitcoin just go down? Let's go back. I'm at Ethereum. Bitcoin's still doing fine. Bitcoin is still doing fine. All right. Let's see. Don't GICs have fixed terms? They do. That's the one problem with the GIC. You sign up for, if it's a 1 year, yeah, you've got a 1 year term. You're not going to get your money back. Let's see. Is it too late to invest in gold ETFs? Well, actually, it's actually not a bad thing right now because gold has corrected. So you're better off investing today than you were about a week and a half ago. That's for sure. But let me show you. Let's go over here to gold. Yeah, where's my gold at? Over here. All right. So, and I'm gonna just pull this in a little bit so we can see a bit of a. So yeah. So we had this. You can call it a double peak actually. But yeah, gold has come down from 43 to 41. Yeah, we're not in a bad spot. Like if you want to gain access, like I think gold is going to still go higher. And I know there's probably some people out there that will say, nope, gold's had its time. It's over, but it's not. I don't think it is. I think gold will break this 43.69 or what was it, 43.79, somewhere's in that area. I think gold's going to beat that. Will we see a 5,000 gold by the end of the year? No, we won't. But we will see it eventually. I will say that. Let's see. You don't have to have them all as fixed. Okay, fair enough. I've never actually bought a GIC, so that's interesting. So you can have, is it like what, a variable GIC? I guess it depends on the financial institutions. Like they all have their own little ways of making different offerings. Let's see. Paul says, if you're asking if too late to invest in gold, maybe that is FOMO. Gold had a huge run up and now is mean reverting. So Paul's bearish. Paul is bearish on gold right now. Is the correction over? I don't know. But I still think that by the end of the year, gold will be higher than these highs here. So 43, well, let's just say, I will say this. I think gold potentially by the end of the year could hit 45. I think it could hit 4,500. Cowboy, have zero use for RRSP. They take more and more. All right, fair enough. All right. And then JJ's mentioning you should look at the RRSP meltdown or drawdown early on if you're able to. 10 weeks. Let me see here. JJ, laugh my funny butt off. When has this government ever been competent? Don't rely on them for anything. Otherwise, complacency quickly steps in. We have a government running this country? Headless chickens. Oh boy. Scratch says you might look at silver for big returns if you want exposure to precious metals. History is a ratio of 1 gold to 10 silver, and we are now at 1 gold for 85 silver. Silver will catch up. Yeah, no, silver's doing good. Silver seems to move more lately. Like when gold goes up 1%, silver's been going up 1 to 2%. So yeah, silver's been moving really well. Now keep in mind there are other minerals out there that I think are really good right now. And actually, one of the ones I'm pretty bullish on is copper. So I think copper, I should, you know what? I should see if they have a copper. I would love to have a copper listing in here. Now I'm kind of curious. Do we have copper? Let's see. That's from capital.com. There's futures, copper on the NCDX. That looks like copper to me. All right, let's take a look here and see if we actually have. Oh, well, that's not it. That's not useful. Copper has never changed in price according to this. I will find the proper one because I just grabbed that out on a whim. But I'd like to see copper. I'd like to see copper in here so that we can look at copper. Cowboy, the nuts are running the asylum. Oh boy. Summit, why MSTE is performing badly other than the great dividends. Yeah, the dividends are because of the volatility. But mind you, MSTE, if I remember correctly, just had a dividend cut. So, you know, you're getting a little bit less on it. The other problem with strategy is, at least in the short term, one of the things that Michael Saylor will do is he will dilute that ETF somewhat to make, well, to basically to make more cash to buy even more Bitcoin. Now, down the road, I think that's probably going to be a good thing, amazingly enough. But it does create, sometimes it does create a little bit more of a downward pressure. So I think that's part of what you're seeing. But when Bitcoin goes on its next, the next time Bitcoin goes on a big bull run, MSTE will look very brilliant. So I like them for that reason. But as I said before, and I will continue to say, I get my exposure to strategy through HHIS. Then that way there I don't have to worry so much about what Michael Saylor's doing to generate more income for Bitcoin. All right. Rory has some chickens. Skiz, can I just these yields that are reported are insane, 1936%. Nothing pays these numbers. They're high. They're high. 36, yeah, that's definitely really, really up there. And we've seen with the 36 that they were losing so much upside potential on that one. The 19, we're doing a little bit better, but nonetheless, this is all based on volatility. And I will say one thing, and this is a future for HBTE. As Bitcoin gets more and more adopted, that volatility will get less and less. So when you're looking at a 19% yield on HBTE today, you look at it down the road. Like, even look at it a couple of years down the road, it's probably, that dividend will come down. It will come down as Bitcoin loses its volatility eventually. I can't give you a time frame on how long that will take, but eventually it will. All right. Let's see here. Cowboy, drunken sailor spending spree since 20. Yeah, Michael Saylor. Pretty much, he's been on a spending spree. He's been buying up. He's trying to buy all the Bitcoins. All right, let's see here. Gold. See, gold is the currency of kings. Silver is the currency of gentlemen. Okay, there we go. Barter is the currency of peasants. Ah, interesting. Let's see. Expecting different results from the same team for the past decade is the definition of insanity. Gold and silver is real wealth. And Morley says, yeah, my MSTY down. Yep. And that's the thing. I mean, it will come up eventually, but it's hard when you've got it down and the rest of the market's at all-time highs and you're looking at your strategy ETF, and it's like in the red. It's not easy. And, you know, I would include in your calculations, though. I mean, look at all of the money you've gotten from them and see if that does change things. See if that does put you in the green. If it does, then it's okay to get out if you want to. That's the way I look at it, because then it's like, okay, well, I still am overall in the green on this one. You know, and I've had it with this volatility. That's always a possibility, but and don't worry, as we do get a bear market, I will have lots of opportunity to talk about managing things in the red, because eventually everything will be in the red for a bit. It's it's not the feel good investing time, but it'll be fine. Let's see, gold and silver, nice. Fiat currency is the currency of slaves. Oh boy. Let's see here. Cowboy says Canada was based on the idea of responsible government. I think that ship sank. I think that was the Titanic. Maybe, I don't know. Paul says new blocks distribution of 36% is set each week based on the current NAV of the stock. So the distribution changes each week. Crypto goes down is less distribution. Okay, there we go. Let's see, we're on the dock getting pulled in too. I feel like MSTY is going to be determined a Ponzi scheme a la FTX. Well, I hope not, but there's two MSTYs, by the way, guys. There's also, I think there's the Yield Max one, and then I think we also have one on our side as well. But the Yield Max one, I don't like those Yield Maxes. The problem is that the synthetic covered calls, I'm not a fan of them. And, and that has kind of soured me on Yield Max as a company. And I know they got some other things out there like ULTY. I'm going to look at them. I'm going to look at them a little bit closer. But right now, I'm not feeling love for them yet. I just don't feel love for them. All right. And let's see here. And like I said, I'm going to skip. If you're talking to somebody else, I'm skipping it. Let's see. Scratch says Canada sold all of our gold reserve at the lowest price possible. Get yourself some metal, not a paper metal, as a safe bet. Yeah, I mean, yeah, I know the government, when they sold the gold recently, I was just like, oh man, gold is probably going to go up now. And that's exactly what it has happened. So you always have to print more money than the last time. The British monarchy set up a feudal serf system that made us feel like we are in control and free. Ah, yes. It's funny, when I read that, when I said control and free, I had Jar Jar in the back of my head going, "We's a free." I don't know why. Let's see. Canada, invest in paper straws and cricket farms. Ah, that cricket protein, it's coming. Let's see. It's plunder or be plundered. Let's see. RRSP is up 87%. Tesla 10%. Blocks 3. Harvest TSLY solely taking profits on TSLA into income. But keep in mind too, though, Paul, you're trading with this. You're not really, you're trading. That makes things that changes the rules a little bit. Jay says, I'm tired of living in this matrix. Black swan event or a reset. The plus side people are free currency slavement. I think bartering is a better system. There are places, I will tell you. When I spent a summer in Florida, and one of the things I learned about in Florida is they've got this underground barter system within Florida. And there's probably a lot of places that do in the States, but it's like if John needs somebody to repair his roof, but John is John's a pool man, well, maybe he finds somebody who is a roofer who needs some pool work, and you see where that's going. They basically switch services. No money's exchanged. Nobody gets taxed. So they do have this pretty big barter, underground barter system in Florida. So I imagine if it happens in Florida, it probably happens everywhere in the States. I wouldn't be surprised, but I can only confirm that I heard about it in Florida when I was there. And it amazed me when somebody was telling me about it. I was like, what? Really? This is kind of awesome. Let's see. Bread heifer were 7,800 on average last week. Buy steak before that gets to the store. Yeah, actually, those of you who may not know, Nate Palmatier, I've had him on the channel a few times, quite a while ago, but he has a big family. He's got 10 kids, and they don't go out to the grocery store and buy steak there. They buy a cow. Now, I assume they buy a cow and the butcher cuts it up for them. I don't think they bring home the whole cow and do it themselves, but I could be wrong on that. I'll have to ask Nate the next time I talk to him. But it's much more affordable to do it that way. If you've got the storage space, why not? Let's see. Lord says, Brian Mulrooney created hundreds of high-paying jobs for his lawyer friends. It was called the Lobby Act, or R.I.P. Democracy. Oh boy. Cowboy. Let's see. The real budget will come with a periscope. Rory says, glad to have farmer cousins where we get our meat. Oh, that's not a bad thing. That's not a bad thing. I'll tell you, Nova Scotia, one of my friends, I used to have a girl that I worked with, and we're pretty good friends. But she's Native, and so every year there's this big some kind of a thing that it's a Native thing. It was kind of like it's like a harvest but for fish. So she'd get all of this free fish, and she'd have more than she needed. So she used to come and be like, here's a bag of scallops. Do you want them? For free, because we're friends. So I used to get all of this, and these were good scallops, like really big. Like, marbles. Like if you play marbles, you got that one giant marble ball. These scallops were that size. I mean, they were really, really good. I got scallops from her. I got lobster, a few other fish as well, and it was just fantastic. It was her share of the catch. So I'm just like, that time of year, she was my best friend for sure. I do love good seafood for sure. Let's see. Laura says, politicians now work for their big political donors. Yeah. You know what? Here's a thought. What if political donations by law had to be anonymous? That'd be a game changer. That would certainly, then again, they probably would lose a lot of donations, because I imagine there's people who make the big donations. They're doing it because they want something. But gosh, I'd love to make that anonymous, because, then, nobody's getting their back scratched for helping out. But at the same time, then, and that's, I guess, the downside of my idea, is that a lot of the big donors wouldn't donate, and then where's the money going to come from? Or maybe we just have a low budget election. That'd be kind of funny. A lot less signs out there. Cowboy, pale bunters will be well over $1,000 now. Neat. I don't even know. I'm not even sure what a pale bunter is. I'm assuming it's something to do with a pail and a bunting, or I'm not sure. Well, wait a minute. Bunting. Is that a train term? Anyway, I'm thinking. I was thinking bunting. All right. I could be off on this one. All right. Paul says, always wonder about selling the USD stocks to then journal to CAD, and the time it takes, like 3 to 4 days. Do I do this or eat the 1.5 FX fee to be instant? Yeah, I mean, I'll wait. If I'm going to save 1.5%, I don't mind waiting a few days. Scratch says, I would love, all right, I would buy a local Canadian cow or half a cow if I could get it delivered in Montreal for sure. You might have to get a truck and maybe go out to some place in the country. There's got to be a way. No one beats our meat. Oh boy, that sounds bad, but it's kind of funny. Now, according to JJ, if you journal over 150,000, at least right now, that it's free, it's free instantaneous on Wealthsimple. Okay, that's interesting. JJ's, he's Paul is with Quest Trade at the moment. Let's see here. I'm going to skip over all of this other meat talk. Red says, I use my dividends to play with HNU. Ooh, HNU. That is that's one of those 2x leveraged ones. I'm trying to think. Is that the? Oh boy, is that the S&P? No, it's either the. No, that might be natural gas. I gotta look. Let's take a look. I'm trying to remember which one HNU is. I was thinking initially, I thought S&P 500 inverse. But let's take a look here. HNU, but then I'm thinking natural gas at the same time. HNU. Yeah, natural gas right here. It's the natural gas bull. All right. Yeah, the Beta Pro natural gas leverage daily bull. So that's going to be 2x natural gas. Natural gas is down right now. I have a feeling natural gas is gonna rebound for sure. I like it. I like it. All right. Take advantage of the match and ditch Quest Trade for Wealthsimple. I think well, Paul left Wealthsimple for Q Trade if I remember correctly. Scratch this. Thanks, guys. I'm craving meat right now, but the disc didn't come yet, so I'll make myself some fine white rice. So there we go. Rice is good. My last round of selling Tesla in my TFSA to buy DLR.U, then journal. Exactly. So DLR is that one that you're using. You'll notice that there's a .U and then a regular. Basically, you're just changing your stock from the US version to the Canadian version or vice versa. But it's good. Rory says I ditched Quest Trade about 6 months ago. And JJ saying it's eons behind Wealthsimple right now. Let's see, Cowboy. Didn't apply for the earbuds on my last deposit to Wealthsimple. Uh-oh, that's not good. That's not good. How far behind am I now? A little bit, a little bit. Let's see, are the stocks at all-time highs really just the money printing and real inflation? Well, there is that too. You got to keep in mind too, yes, inflation does, of course, push the prices of stocks up a little bit. It's one of the reasons that the stock market tends to always go up because obviously with inflation, if everything were flat, like if everything stayed flat and nothing ever increased in value, the market would still go up at least to match inflation. So yeah, there is that as well. Let's see, sentimental. All right, even Peter Schiff was eventually right. Look at gold now. All right, and I'm gonna start skipping a few things, guys, to try to get caught up here. Paul says the last journaling was worth 250, an equivalent 1.5% FX fees. Holy cow! Oh boy. $100 on red. DJT, the Russian roulette table. Maybe. What do you get if you spin and you get Putin? Just asking. Asking for a friend. Lord Fubar, I have SILJ and WPM for hedge against the Donald. No, not a bad idea. All right, and I'm gonna skip over anything where you guys are talking to each other. I'm skipping. All right, let's see. I looked at the USACC ETF KGLD, but thought the gold was too high. All right, fair enough. Let's see. Central banks across the globe are not stopping to purchase. Gold is only going up. Yeah, I mean, a lot of banks are starting to buy gold. So, yeah, absolutely. I can see a big demand for gold. Like I said, end of the year, I'm expecting to go past that 4,500 mark. JJ says, I'll wait for gold to correct. It'll probably add some KSLV and KGLD from KURV moving forward. Okay, well, hopefully it corrects a little bit deeper. Maybe if Paul's right, you might get a chance. But let's see, JJ, no better time than the present. I'm with Skiz on this one. I am with Skiz on this one. Let's see, London ran out of silver. Oh boy. All right, let's see here. Paul says, hey, JJ, you read my mind with KSLV. Silver will be triple digits by next year. Let's see, KURV is a great fund manager. Been following them ever since the interviews done by Brad. So who's that? Income Architect with the CEO. Nice. Don't think any country is still on the gold standard. Maybe not, but it still doesn't hurt to hold gold. They stopped selling silver to retail. You can't find it. Candace, why did you sell your position on IVN if you are bullish on copper? This is just beginning. Because it was a swing trade. It was a swing trade with a target. It wasn't an investment. So I always keep that separate. I'm very bullish on IVN long term, but it was a swing trade. That's why. It's in my swing trade account. Those are not long-term holds at all. Lord Fubar, silver ETFs in India are not selling any more shares. No silver for the demand. The shorts were covering last week. All right. And yeah, strategy down 24% since June. Oh boy. Let's see, Scratch. Might be hard to get your hands on physicals in the next month. Like what physicals? Oh, physical gold and silver. Is there any chance Perry from Perry's PEI verse will come on for a chat? I need to reach out to him. So I think JJ mentioned to him that I would be reaching out to him. So I gotta do it. JJ, can you do me a favor? Can you just forward me his email address and I can reach out to him this week? Sorry, yeah, and says I messaged Perry actually giving him a heads up that Candace will reach out. So very likely he'll be a near future guest on here. Yeah, absolutely. I want to bring him on. So yeah, if all goes well, maybe I have to talk to him first, but I would love to have him on for November, early November actually. Drunken Sailor is the Liberals. Oh boy. Okay. Let's see. Washington Post. Chinese and U.S. officials tentatively agree to avert 100% tariffs. Okay, that's interesting. I'll have to look more into that for sure. Michael says, hello, Candace. I took a small position in Hemisphere Energy for income and potential growth after you were impressed with your preliminary analyst. Yes, I remember them. Yeah. Okay, let's hope it works out. Summit, would have covered call ETFs in a non-registered account be a good idea? If your TFSA has room, then it's not a good idea. If you have lots of room in your TFSA, get everything tax-free. But depending on the covered call ETF, a lot of them are pretty tax efficient. So if you do have to hold them in a non-registered account, you're going to have a lot of capital gains. You're going to have a lot of return of capital. Those are very tax efficient. So yeah, it's not a bad thing. It's not entirely a bad thing. All right, let's see here. I heard ULTY sinking also. Like I said, I don't have a good feeling. About about yield max. So let's see. I have MSTY and MSTE. Wealthsimple has been buying real gold, and you can order real gold coins at 1 ounce or 1/10 of an ounce. Oh, interesting. I didn't realize you could actually order some physical coins from them. That's kind of neat, guys. That's kind of neat, actually. All right. Scratch, I doubled the price of my metal in a year and a half, silver and platy. That is at yesterday. This is just the beginning. So yeah, platy. So that's what, platinum. There's also palladium as well. That's another precious metal that you might want to look at. Let's see, platinum gold ratio is still really cheap. Get it before you can't, in my humble opinion. Aha, that Periscope comment budget will also be so underwater. Oh yeah, here's yesterday. I was like, you were mentioning yesterday, and I was like, I didn't see yesterday. All right, now I see yesterday. Yeah, yesterday says, Scratch, I bought physical gold in 2017. Now I'm into equities for the alpha. Let's see, gold is the leader of a commodity bull market. 1 year of 2 front running. Yeah, I agree. I think gold is going to be running for another year, definitely. Fies man says, love your info. Keep up the good work. Well, you're welcome. All right. Scratch, you got it way before me, but I think it's never too late to jump in on the commodity train. There we go. Lord Ferber, Digby, Nova Scotia. Ooh, I want some Digby clams. That's what I want right now, but I'm not going to get any, but not in Ottawa anyway. Cowboy, political donations are supposed to be capped. Yeah, they're supposed to be. The key word in your statement, though, Cowboy, is supposed to be. There's ways to work around everything. I mean, you know, there's many ways to get around that. Max 1000. Let's see. Pale bunter is an orphan calf. Okay. But bunting is a train thing, right? I keep feeling like bunting is a train thing. Like when you is that when you're switching cars up? Is that bunt? Like I know a couple of you guys are railroad people. Let's see. Fi says HHIS is the best. Yeah, I like HHIS a lot. Scratch, not buying any miners right now. A few hundreds% up. Buying Canadian Energy iron ore and cost average in IGO. All right. Let's see. Paul says, I'm getting a transfer monthly reward of $129 from Quest Trade for 24 months. Not too shabby. Not too shabby. All right. 29 Typus says, is there a reason YouTubers do not mention Global X, USSX, S&P 500 ETF, and prefer VFV or ZSP? I don't know if there's a reason why. I think with VFV, they've been around for a lot longer, and I think that might be part of it. But yeah, Global X, like if let's actually pull up. Let's grab them. USSX right here. So here we go. So this here is another index for sure. And let's be very fair. Let's be very fair here. I'm going to pull it up here so you can see. This one here has gone from 31 to 36 in the last year. And you know what? Let me just duplicate this tab. And we're going to bring up VFV. We'll bring up VFV here at the same time. VFV. All right, here we go. And we'll bring up the 1 year. And you're going to notice it's going to look at this. I'm going to flip back and forth. There's no friggin' difference. Like, really, they're both, I mean, to me, they're both as good. Now, one advantage with USSX is it's at a lower price. It's a lower entry point. Because when you look at VFV, VFV is pretty high. Like right now, you're looking at $168 to get in. Now, obviously with Wealthsimple, fractional investing, not a big deal at all. However, if you are, and there are some people out there that don't like fractional investing. There's people that says, I want my shares in whole number or my ETFs in whole number. I want to buy one or multiples of one. And in that case, this is a nice, easier entry point. They're both fantastic. Like I like, VFE normally pops to my mind only because I'm so used to it. But yeah, the Global X USSX it's fantastic. There's nothing wrong with it. They're definitely both, to me, they're both top notch. I like them both. And Global X is a good company. So yeah. So is there a reason? I think it's just VFE is kind of, most of us probably came up where everybody and their dog talked about VFE. But you're right. Global X USSX is just as good. I concede. I concede 100% to that. All right, Lord Fubar. Gold beat the S&P 500 over the last 10 years, but the media didn't start talking about it till recently. That is true. That is true. Yeah, gold is one of these things that nobody really pays attention to it unless it's, making some really big moves. So, but yeah, gold has quietly been, has been a little bit of a workhorse behind the scenes for a while. So yeah, no, I agree with that. This is a long Sunday. Yeah. Oh my God. We're at 2 hours and 23 minutes. All right. We're going to get caught up, guys. If you have your last minute questions, get them in. I'm going to try to zip through what we got left here. Because keep in mind, I still have to edit the intro part, right? Paul says, when people are lined up outside to buy physical gold, it is the top, or is it the top or FOMO? It's a good question. It is a good question. John says, if you get a new position in gold, what will be the sticker you will pick? It's a good question. Right now, I've got my boats. My horses hooked up to not gold directly, but I really love London Gold. So LUG, that's who I have. And let me just pull them up here. So London Gold, they are a gold producer. They produce gold. Now, I will pull up here the last year. They've been on a nice bit of they've got a little bit of correction with gold. That's normal. But one of the things I really like about London Gold is, and I'll show you what it is. Just give me a second here. Let me pull this up here. Key data. Dividend time. You'll notice the last 2 quarters, they've done bonus dividends. So their normal dividend is this one here, around the 41 cents. So back in June, they gave an additional dividend here. Actually, in June, they gave 2 additional dividends. They did one of 20 cents and another one of 57 cents. So you ended up getting 3 dividends in June. In September, they just did the bonus one. So you got your normal 41 cents, which actually went up to 41.3. And then they gave you a bonus, 67.4 cents. So they've been giving back some of the profits that they've been making they've been doing really, really well. So I like that. I like bonus dividends a lot. So that's one of the reasons I've been hooked up to Lug. I like the company. I think they've been doing really, really well. Now, if I was going to get into gold per se, I probably would be looking at, I probably would look at an ETF opposed to anything else. But right now, I'm pretty happy with LUG. I'll leave it at that for the moment. Let's see. I'll invite you over and your partner for a mussels and fries if I go near Ottawa. Let me know if you are interested. Ooh, mussels and fries. That's actually not too shabby. I used to have mussels downtown Halifax. I used to go to a couple of restaurants down there that I used to go to that I could get a nice feast of mussels. Mussels are good. I do like mussels. I mean, clams are a little better, but mussels are not that far off. Not that far off. Tim is in the house. Let's see. I fell asleep on the commodity train once, woke up in a hostel with my shoes gone, called the Uber to take me home. Oh boy. Shunting is train. All right, not bunting, shunting. There we go. Thank you. Thank you. I knew it was something like, I knew it was close. I knew it was close. Morningstar also has suspicious ratings on, or suspicious. Morningstar also has suspicious ratings on global. I haven't seen that. I don't know anything about that, but that's interesting. All right, and yeah, exactly. They're the same. Same as ZSP. Yeah. There's a lot. I mean, if you are a passive income. If you're a passive ETF tracking the S&P 500, you should all be pretty close to each other. You really should. I shouldn't see a lot of differences. I really shouldn't. Let's see. Fractional takes too long to sell. Can take hours. Not anymore, though. I thought that it was almost instantaneous now on Wealthsimple, but maybe I'm wrong. What is your number one pipeline stock choice? That's a good question. If I could only choose one, I probably would go with Enbridge. But I don't have to choose one. So I go, right now, I like this one little ETF. I still get it up here. PPLN here. So this here's your Global X Equal Weight Canadian Pipeline Index. So I've kind of liked this one. It's not doing great per se, but I still like them. I still like getting that exposure to all of them. But with Enbridge, and this is the nice thing with Enbridge, and this is why I came up with Enbridge first, is when we go into Enbridge, let's pull this up here, you got a pretty nice dividend on this one here. So it is a quarterly dividend, but it's like 5.743%. So that's not too shabby. When we look at Enbridge over the last year, they're mostly, on the most side, they're moving up, higher high. Well, is that higher? No, those two highs, that's all about the same. I was going to say higher highs, but that's a higher high for sure over there. So yeah, I do like Enbridge as well. All right, guys. Whew, what a show. This is a long one. I will, of course, be back on Wednesday. Wednesday, we will have the market close. We got a new video dropping Tuesday. If you're a channel member, you'll see it tomorrow. I'm loving it. This has been a great show. You guys have been a great audience as usual. So until next time, and I gotta pull me up big. I gotta be big. I can't leave when I am big. But until next time, guys, enjoy the rest of your weekend. And let's see what the market brings in the coming week. All right. Bye, everyone. Bye.